Good morning everyone and welcome to another RF Crypto video. Today's markets, they're not doing that well. We are below the $1 trillion market cap level for the first time in a couple of weeks after the markets dropped by about 2.5%. Bitcoin is down 1% in the last 24 hours, but a massive 12% in the last 7 days. Equally, Ethereum is down 2.5% in the last 24 hours and almost 20% in the last 7 days. So the markets had rallied for about a week or a week and a half, and then in the past week or two, the prices started dropping again, and they corrected themselves back to the level that they were before the mini rally. So the mini rally took the global crypto market cap from about 890 or 900 billion to about 1.15 trillion, and now this is down to 998 billion. Now, we don't know if this is a sustained bear market or if this is a temporary one where we will see a sort of decrease and then the prices stabilize and then we see another increase. I guess it's a matter of many cycles where the prices go up and down and up and down, but now it seems to be stabilized at around the $1 trillion mark in terms of the market cap. The rest of the market is also down, as you can see. The last 7 days, we see double-digit decreases on most of the cryptocurrencies. Looking at the Bitcoin price, we see that after a massive rally that occurred over here, the prices sort of stabilized, went down, up and down through these mini cycles. However, now in the last 4 days or so, the prices saw a massive decrease. They're at around 23,500. They went all the way down to 20,772, and now they're stabilized around 21,000. But this decrease signifies that there is still a lot of risk in the market. There is still a lot of uncertainty, especially due to inflation fears. There were expectations that inflation was somewhat under control. We could have gotten it under 8%, but as the Fed's minutes from their meeting last week said, this isn't the case. We still have a lot of work to do. We still have a lot of pain to go through. And the Fed will keep increasing interest rates until such a time that we see inflation getting controlled once again. And by controlled, I mean down to about 2%, which is the Fed's aim. So for now, I think that fear will remain in the market. Uncertainty will remain in the market. Prices might go further down. I'm not sure. If nothing else happens, and if the global market forces are positive, then the market will also move in a positive direction upwards, maybe towards the $22,000 resistance level, all the way up to 23,000 and 25,000 as we saw at one point about a week ago. So Tornado Cash developers arrest in the Netherlands draw community protest. On the 10th of August, Tornado Cash developer Alexei Petrev was arrested on 10th of August on suspicion of involvement in the Tornado Cash protocol that was sanctioned earlier this month by US authorities. So this protocol, Tornado Cash, allows the mixing of cryptocurrencies which can obfuscate or hide where the funds come from, who they come from, and where they're going. And the US authorities banned it and sanctioned it due to the fact that they said that it was being used by North Korean hackers to pilfer funds from various protocols. But despite the fact that this Tornado Cash protocol is being used for illicit purposes, it has also legitimate applications, and the Dutch authorities cannot yet state which laws Petrev allegedly broke. Different press releases and statements have offered different explanations. Petrev himself has yet to be charged with any wrongdoings, so I don't understand why they're still keeping him in custody, but many people are now worrying about what Petrev's arrest means for the future of Web3, and are conscious of a chilling effect on the Netherlands blockchain ecosystem, where they say that it's a case where the fundamental principle of crypto is being questioned, and Alex is just a developer. They should be going after the true criminals, and the fact that the creator of this Tornado Cash protocol is not responsible for criminals using his code for doing illicit activity. That's like saying that the inventor of the knife is responsible for murders. And it's also equivalent to put someone in jail that codes Linux because some hackers somewhere in the country are using it for hacking some government systems. And a lot of people, rightfully so, have said that authorities should really be focused on holding accountable those responsible for debacles such as the recent crash of Terra USD, which caused a lot more pain in terms of the money lost by not only the people, but by institutions. And by extent, the crash of Terra USD is what caused this bear market in the first place. So it's only fair that people are telling the authorities or asking them to investigate Terra USD instead of Tornado Cash, which, I mean, it has been used for illicit purposes, but it hasn't crashed the market like Terra USD had. So average Bitcoin transaction fees drops under $1 as network difficulty recovers. The average transaction fees on the Bitcoin blockchain fell below this point for the first time in over 2 years, further strengthening its use case as a viable mainstream financial system. High transaction fees over blockchain networks work against the users, especially when making low value transactions. So let's say that you want to go buy a coffee and it costs $1. If the fee is $1, then it doesn't make sense, because then you'll be paying double for the coffee. You'll be paying $2 for a $1 coffee, which is something that has kept Bitcoin, Ethereum, and other major cryptocurrencies from mainstream adoption. The cost is just prohibitive, especially Ethereum, which has incredibly high gas fees or transaction fees. But you have platforms like Solana, which aren't so safe or stable, that have transaction fees that are in the cents, which is incredible. And this is more of what we need. And hopefully with the new Ethereum merge and with the development of the Bitcoin network, we can lower the transaction fees even more. So in addition to timely upgrades, the drop in transaction fees can be attributed to multiple factors, including falling market prices and lowering mining difficulty. But lowering mining difficulty isn't the case at this moment, because if you look at this chart here, August marked the end of the 3-month-long downfall of the network difficulty, recovering back to 28.4 trillion from its freefall. Thanks to consistent community efforts, the Bitcoin network continues to display telltale signs of a healthy financial system. And it is a case where the network difficulty is increasing again. It means that the network is becoming more secure, more robust, in the sense that more people are trying to mine Bitcoin, which means that there are more nodes in the network. And that means that it becomes more decentralized, it becomes safer, and it becomes more secure. Australia's new government finally signals its crypto regulation stance. So aimed at being conducted before the end of the year, the token mapping exercise is expected to help identify how crypto assets and related services should be regulated. The statement noted that more than 1 million taxpayers have interacted with the crypto ecosystem since 2018, and yet regulation is struggling to keep pace and adapt to the crypto asset sector. The adoption of cryptocurrency in Australia has been explosive. Australia is ahead of most of the other countries in terms of adoption, in terms of regulation itself as well, and in terms of the development of the crypto industry as a whole. And it's expanding so fast that regulators haven't had time to put out laws and regulation in order to keep pace with the development. So this token mapping exercise will be a step in the right direction to bridge the significant education gap between regulators and policymakers. And the additional benefits of token mapping are many. It will provide greater clarity to crypto investors, aid companies in developing their own blockchain-based innovations, provide guidance to digital currency exchanges, as well as assist regulators in shaping an appropriate regulatory regime. And this token mapping exercise is extremely important. It's a step in the right direction, absolutely. And it's one such that policymakers will become more educated in the crypto industry and the crypto space, and they'll able to make educated decisions in terms of what laws to implement and how the crypto industry should be run. And this in turn will have positive impact in the industry itself, because the companies will be able to operate freely. They'll be able to operate within parameters that they know that if they operate within them, they won't be breaking the law. And it will further lead to crypto adoption, because the population will see that there is regulation, it's safe, and now they can take it mainstream. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.